Yeah, all of it is booming. That's what we understand. Probably booms more than gold. Probably booms more than securities and shares and securities. Why? Because we are given to understand in a year we can double money in plots. That's what we are given to understand. I am not double money though. I'm just trying to tell you what perspective is there in the market. So, species of plotted development as a species of real estate transaction is very interesting for investors. Especially if you have surplus funds, you want to see how you can diversify your portfolio in terms of investment. Stocks and shares is obviously there, FDs are obviously there, there are other means of investment like gold and others. Plotted development is also something which is very, very enticing for an investor, if you have surplus funds. So what exactly is plot? In simple terms, I have a barren land or a piece of land which is probably an agricultural land. I try to convert that into a non-agricultural land and seek or try to convert that big piece of land into smaller piece of land which makes me easily sellable. Because I have to sell 2-3 acres of land together without doing much of it, probably you would not find many buyers. However, when you try to create that as a gated community, that 2-3 acres of land, and create smaller pieces of sites is what we used to know earlier, now we call it as plots. So when you create the smaller pieces of plots inside the bigger piece of land that I have is what I am talking about as a plot. Yeah, that is plotted development. It is also called plotting. It is also called sale of sites individually in a gated community. Okay, it's all same terms used differently. Now, this is overall things. While doing the whole, making the bigger piece of land into smaller plots, I have to do a lot of things. Once I create smaller pieces of plots, obviously I have to give you access way to each of your plots, because if there are say 2 acres of land and I create 100 plots, that means every plot should be accessible from the main road or the road from which I am coming into the project. Yeah. So thereby, what do I do? I lay roads. I create drainages. I create electrification, facilities. I create plumbing lines because water has to come into the project and stuff like that. So there are few things which I have to do on the land to make it saleable. When I have to make it saleable, the plot which I am talking about has to have water supply, has to have access roads, has to have street lights because I have to have the roads lit. If not, I cannot even reach my particular plot. I have to have electrification, means I have to draw electrification when I construct a piece of a house on top of a piece of land that I am buying. So these activities is typically what is involved when I create a land into a plot. And this is what exactly is probably department behind to say you are doing something beyond selling only land, where there is an element of service for us to understand, to say that the developer who is doing these activities for selling to third party is a service in the hands of the developer. These activities which are listed down, which is listed down here now, saying that converting the non-agricultural land into non-agricultural land, creating the overall plan for us to take the sanction from the respective local authority, because you could be in various municipal authority under which you will be governed depending on where the land is situated. So getting the plan sanction done and creating the actual development of the project from a barren land or a piece of big land into small plots of laying the roads, giving you street lights, creating the plumbing lines, giving you electrification lines and stuff like that is typically what is involved in a plotting. Okay. This is what we are required to understand, whether there is an element of service in the hands of the person who is creating these plots. So what are the steps involved before I could probably sell these plots is there on the slide. One, I will probably convert the agricultural land into non-agriculture. These are generally situated a little in the outskirts. Generally these are lands which are agricultural in nature. I have to first convert into non-agriculture because the use is now non-agricultural based. Then what I do, I have to prepare a plan. When I mean a plan, obviously all of us know what is a plan. I have to say that, I have 2 acres of land. I am planning to create, 50 plots in a 2 acre land. It could be 20, 30, 30, 40, 40, 60, 50, 80 and stuff like that, as we understand in Bangalore. And then I am also drawing in the plan saying that these many roads I am creating, these many lines I am drawing in terms of plumbing and stuff like that. This plan is what is given for various approvals. It could be over a lot of approvals. It could be fire approval, it could be pollution, stuff like that. There are enough approvals that I have to seek. Once those approvals are sought, I also send the plan for sanctioning. When I have to send the plan for sanctioning, I have to give it to the local authority who would sanction the plan. Once the plan is sanctioned is when I really can go to RERA for getting the project approved through RERA, because without getting the approval from RERA, I am not even supposed to market the project. So we know that, if I am regulated by RERA, I have to register myself under RERA and only then go to the market. Even soft launch ideally is not allowed. That means I cannot create a marketing brochure, I cannot create any saleable documents which I am selling or trying to sell in the open market. So I have to have a RERA. So I will seek a RERA and then I will start booking the plots. When I mean booking the plots means I open the project for outside public. People will come and see the plots, and then there is a launch of the project. You're interested, you give me booking advance. Once you give me booking advance, like a typical apartment project, I will enter into an agreement to sell. Once I enter into an agreement to sell, there are like in milestones. Means milestone based payments have to start coming. Once I have the agreement to sell, they'll say you can sell any of the units but only to the extent of 40% till I give the final release. This is second variety. The third variety which I have seen, which also could be very surprising for all of us, is initially on plan sanction itself, they will give you 100% release. That means you can start registering the plots in the name of the buyer immediately on plan sanction. You don't have to wait till the roads are laid, the drainages are ready, the plumbing system is okay, the lightings are, the street lights are okay, are available or not. You can immediately on plan sanction start, entry into a sale deed with the prospect or the final buyers. These are the varieties of releases which are possible in a plotting. This is what I wanted to just highlight for us to understand. Release order is done, I finish the balance work, finally I hand over the piece of plot to the buyer. Then the buyer decides what he wants to do with the plot. He can either retain as a mode of investment, or he can start converting his house, rather constructing his house for the purpose of dwelling in that particular house. Yeah.
So what is this reimbursement of the debt into
Okay. I thought I will convert. Okay. So typically what happens, as I told you, in the total 2 acres of land in our example, I am converting the plots, rather the land into pieces of plots, say for example 50 plots. If I have 2 acres and I convert 50 plots, assume the saleable area is only 1.2 acres. There is 0.8 acres worth of work which I have done, which are predominantly like roads and access ways. Now, as per the plan sanction, depending on the Town Planning Act, the plan sanction itself will say that the common areas that are developed in the form of, say for example, a road has to be relinquished to the local authority. That means the roads which I create inside the project is neither owned by the developer nor by the buyer of the plot. It will go back to the local authority itself. That means the roads are never owned by the promoter nor the buyer. So the relinquishment immediately happens along with the plan sanction. That is a precondition for the plan sanction. That means if I have to give you sanction to create a plotted development, the local authority will say, boss, based on the plan approval which I am giving, these many things have to be relinquished to the local authority. So it will have to be immediately relinquished and have to execute a relinquishment deed in the name of the local authority. Probably I missed that on this slide. Yeah, that happens immediately. I think that comes along with getting the plan sanction done. Is this clear? So till now there is nothing called GST that we have discussed. Even now we will not discuss GST. We will come to GST a little bit later. Now, while understanding what plotting is and what are the GST implications, for us we have to know few terminologies where with effect from 1/4/2019, the GST law has made us understand you have to go to RERA, understand few terms and come back to GST, because implications will be what RERA is saying on these particular terminologies. What are those? One is a project, second is a real estate project, third is an apartment. When you look at the rate of tax of 7.5% as he was pointing out on an apartment, they have said that you have to go back to RERA and understand what is a project, who is a promoter, what is a real estate project, what is an apartment, understand the terms there, come back to GST law and then see whether the rate of tax is 7.5% or not. So for us, even though I am not discussing an apartment, I have to impress upon you what is a project, what is a real estate project and what is an apartment, because it has relevance for us to understand what is the rate of tax on plotting if at all it is taxable under the GST law. Okay. What is project? Project means as defined in ZN. What is ZN? ZN is real estate project. These are terms in RERA Act, by the way. Yeah. Real estate project is important for us to understand. Probably I'll read out, it will take 2 minutes. Real estate project means the development of a building or a building consisting of apartments, or converting an existing building or a part thereof into apartment, or the development of land into plots or apartment, as the case may be, for the purpose of selling all or some of the separate apartments or plots of building. I'll stop here. Very important. For something to be called as a project, it is not our normal understanding that if I construct it is project. It has to be this. If I has to be this means what? There has to be intention for sale. If you look at the third line, for the purpose of selling all or some of them. Let's take an example now. If I am developing a tech park, if I am developing a tech park with an intention to not sell but to lease, our tech parks are developed to lease or to sell? Lease. Correct? So if the intention with which I develop a particular piece of land into a building is only to lease and not to sell, is it a project, or rather is it a real estate project now going by the definition? No. If it is not a real estate project, then wherever in the notifications used post 1/4/2019 where they use the terminology project, it is not a project at all. From rate of tax perspective, from RCM perspective, from time of supply perspective, from exemption perspective, wherever the connotation or the phrase used is a project or a real estate project, and we are talking about a commercial development not for sale but for leasing, it is not a project for the purpose of those notifications. Very important for us to understand. I use those respective things in subsequent slide. So now, if you look at real estate project definition, apartment finds a separate nature of transaction. Conversion of land into plot is also a separate species of transaction. Means what? An apartment is not equal to plot. My only objective of putting this definition here is make you guys understand that apartment and plot are not one and the same. Means the tax treatment of apartment and the tax treatment for development of a plot should not be same if the terminologies used in the rate notifications are development of an apartment. This is what I wanted to understand on this slide. We'll understand a little more later when we go to the next slide. Is this clear?
So where these definitions are borrowed from?
Where at? Real estate, yeah, it's there. These are the respective. If you go to GST rate notifications, then directly to Real Estate Regulatory Act, okay, which is this. So I borrowed it from there. Apartment also. So now real estate project, when we read, we understood apartment and plots are used differently. When you look at the definition of apartment as well, there is no plot involved there. That means apartment definition re-emphasizes the fact saying that apartment and plot are not one and the same. My objective of this slide is only that much right now. Yeah, we'll get into a little more detail when we go to the next slide. Now, keep this in mind what we discussed in the previous slide. Now we'll go to the rate entries. With effect from 1/4/19, the rate of taxes for construction services underwent change. I'm sure all of you know that. Prior to that it was different. Post that is when that 7.5, 1.5 and all of that has come into picture. What I'm trying to do, entry 3 of the rate notification is relevant because entry 3 talks about construction service which goes under the HSN 9954. Yeah? Entry 3 has 3.1, 3.1a, 3.1b, 3.1c, 3.1d, 3.1e, 3.1f and goes up to 3.12 rather. So what I'm trying to do, the relevant entries which are required for us to understand, basis the definitions that we discussed in the previous slide, I have put here along with the rate of tax applicable to that. If you look at the first entry, the first entry covers actually 4 entries. For me to make you understand what is the rate of tax, I have clubbed all of those 4 into one single entry. Construction of residential apartments by a promoter in a REP, RREP. REP is a real estate project, RREP is a real estate residential project. Okay? Construction of a residential apartment is 1.5% or 7.5%, depending on affordable, non-affordable. Now, if you look at the entry, what does it say? Residential apartment. Can it include plot? Is rate of tax on plot 1.5% or 7.5% going by this entry? No. So my objective is met on entry 1 now. Second, 3.1b, construction of a commercial apartment in a RREP, residential real estate project. So if there is a residential real estate project, part of which is commercial to the extent of that, then the rate of tax is 7.5% even on the commercial. If the commercial development is a real estate project other than real estate residential project, then the rate of tax on commercial apartments is 18% and not 7.5% or 1.5%. So 1.5 and 7.5 comes with the restriction of input tax. 18% does not come with the restriction of input tax. In 18% you can claim your input tax and offset it against your output tax of 18%. So if it's a commercial apartment in a project, I've missed the term to mention here because it says real estate project. So now you tell me This 18% rate of tax is for what? Commercial apartment in the REP is for selling or non-selling? Obviously. So that means what you're talking about here is constructing a commercial apartment with the intention to sell. If I sell those commercial apartments, the rate of tax is 18%. If I lease those apartments, it is not going under this entry. It goes under 9972, renting of immovable property service. Okay? So commercial apartment 18%. Now, if you look at 1, 2, 3, whatever I have mentioned there, is there anywhere plot or development of plot which you can fit into? No. Now, where do you fit then? Come to last entry which I have placed on the slide, which says construction services other than 1, 1A, 1B, 1C, 1E, 1A, 1F, 3, 4, all of those. Okay? The rate of tax is 18%. Now, if you believe you are developing a plot from a land to a plot, and before your completion of development you enter into an agreement to sell with a prospective buyer, is a service. We will discuss that in the subsequent line. Is a service, but not falling under 1A, 1, 2, 1, 2, all of those what we mentioned there, then it by default goes into residual entry in the last row in my slide. So what should the rate of tax on that kind of work which I am doing on a piece of land to convert into plot at the behest of a buyer? It should be residual rate of tax for works contract at the rate of 18%. Now the next question which you will ask is, if it's 18%, now the value of land is also involved when I do plotting. Correct? So if you go and buy a plot development now, is that plot, is the value on the land involved? Yes. If the value of the land involved, we understood saying 1/3 is a deemed deduction. Correct? 1/3 is a deemed deduction which is permissible if the value of the land is involved in the total amount charged from the buyer. Now, to understand that, I have placed the explanation which is there in 11/2017, which is the rate notification from these entries are borrowed, which very clearly says, in case of supply of services specified in 1, 1A, 1B, 1C, 1C, all of the same thing which is there in the last entry. Only in those entries, if the total amount charged includes the value of the land, is when value of the land is deemed to be 1/3, not otherwise. I don't know whether I made you understand what I wanted to. If you are falling under 1, 2, 3, there are 4 entries on top. If you fall under 1, 2, 3 entry, and if 1, 2, 3 entry has value of the land also included in the total consideration collected, then the law says only 1/3 deduction will be given towards land. Balance is all service under the GST law. If you are not falling under 1, 2, 3 in my slide, and you are falling probably in the residuary in the 4th entry, you are not obligated to claim only 1/3 land deduction. That's my objective, to make you understand, going by the explanation. Because this is the explanation which says only 1/3 is allowed as deduction of land and 2/3 is construed to be services. Did we get this point? Why am I saying this? Is when I buy a plot, there is value of land, there is value beyond land. If you agree there is something beyond land and element of service is present, am I obligated to claim only 1/3 towards land and pay service as 2/3? Is my question which is there for you guys. Reading this particular thing on the slide, I would want 1 or 2 answers from you guys.
No, sir.
Why?
So that we don't fall into those categories.
Correct?
You're not calling first.
Perfect. That's all. You don't have to answer beyond that right now. That means I am not forced to claim only 1/3 land deduction. Let us understand that and go ahead. And then we see where do we land ourselves. We understood what are all involved in plotting, what are the activities which are there, what does RERA talk about when it comes to a plot, is it same as apartment or not. Then we understood the various rate entries and understood that rate entries for apartment cannot be borrowed for plot. Now really let's come back and understand what is taxing on a plot. There are already a lot of precedents available in law. When I mean precedents, it's circulars are there are advanced ruling, there is also high court ruling. Okay? So let us understand one by one what those guys have said in those respective things and then come to a conclusion whether it is taxable or not. First, there is a circular 177. I am not getting into detail, it's there on the slide. I will tell you what it tries to say. It says sale of land. Mind this. Sale of land after leveling, laying down of drainage lines, water lines, electricity lines, etc. That is sale of developed land is not taxable because it is falling under entry 5 of Schedule 3. It is neither supply of goods nor supply of services. They are trying to say sale of developed land is not taxable. Unfortunately, while giving this clarification, the clarification does not make you understand whether if I enter into an agreement to sell prior to development, what is works contract in an apartment as well? If the apartment is complete, if I enter into agreement to sell, is it taxable?
No.
Why? Building is already in place. What I am selling is immobile property. Schedule 3 attracts no tax. Likewise, if I am developing a plot, if I sell the plot after development, what am I selling? Land. Schedule 3, no tax. Unfortunately, the way the clarification is coming in the circular, they are saying sale of developed land is not taxable is what the clarification is. We already knew that. We did not want that kind of an clarification through circular. Unfortunately, that is what circular clarifies. It doesn't talk about a situation where if activities are getting carried out, during the course of carrying out the activities, there is an agreement to sell with a prospective buyer. What happens to the advances which I am collecting from such buyers? Is it works contract in nature, or still it takes the coloration of a immobile property sale? That is not clarified. However, the clarification says sale of developed land is not taxable. Schedule 3, entry 5. Okay, let us understand this and go ahead. Again, two Karnataka advance rulings have placed on the slides now. One here and the next in the subsequent one. Rabia Khanum. This went up to appellate authority as well. What AR said was borrowed the circular and said no tax. Even on transactions where advances was received prior to completion of the work. That is what AAR said. Department filed an appeal. Okay, department filed an appeal. Department contested that there is an element of activity carried out at the behest of the buyer wherever agreements were entered into before completion of the development work. Like an apartment in a plot, I am starting to develop, work is still not completed, I start entering into agreements with buyers. Department contended that wherever I have started getting advances or I have entered into agreement to sell prior to completion, it is akin to a works contract which is there in an apartment, it should be offered to tax and the rate of tax is 18%. That is what department contended. Okay? Assessee contended that no, go by the circular. What I am doing is end of the day only selling land. Sale of land is excluded in Schedule 3. It cannot be taxed. That is what they tried to say. AAR, which is Appellate Authority for Advance Ruling, said that, remember relinquishment now, in slide 2, what Sir was also pointing out. Whatever I am doing is predominantly only enhancing the value of the land. Whatever I am doing on the land, piece of site which I am selling or the plot which I am selling, is only enhancing the land, nothing beyond that. Whatever I am creating outside that plot is end of the day anyways getting relinquished to the local authority, nothing to the buyer. I'll repeat this. Whatever I am doing on the piece of plot which I am selling to the buyer is anyways only enhancing the value of the land. Land is anyways excluded, no tax. Whatever I am doing outside the particular plot is in a common area which end of the day is getting relinquished to the local authority. So I am obligated to relinquish. So activities are to the local authority. That cannot be made tax as service in the hands of the developer to the buyer. So AAR says no tax even if the advance is received prior to completion of the work. Got this? This came in Jan or Feb 2023. The next one came in May or June 2023 by the Advance Ruling Authority. Okay? Here, this is Godrej Properties. Godrej is a well-known developer in Bangalore as well. So, one of the project in Bangalore, they went for an advance ruling. There again, the question was a little different when you compare to Rabia Khanum. Rabia Khanum had no many facts. They just said, I am developing land. As per the plan sanction, I am required to develop road, drainage system and all of that, which will get relinquished. I am relinquishing, no tax. Request to see whether tax is there or not. Both the authorities said no tax. Godrej went with little different facts. Godrej said, I am charging for land separately. I am charging for basic infrastructure separately. I am also charging for common amenities separately. Okay? Land, only to the land. Basic infrastructure is your electricity, water, drainage, sewage and all of that. Common amenities is your clubhouse, gymnasium, parks, kids play area and stuff like that. In the facts, it very clearly demonstrated that the basic infrastructure are statutorily required. That means the plan sanction is given with a condition that the basic infrastructure will be made available to the buyers. Okay? Whereas the common amenities are not promised in the plan sanction, it is only promised to the buyer separately outside the plan sanction. That is, I am giving more value add than what I am required as per the plan sanction. Now, the advanced ruling authority says land cannot be taxed, Schedule 3. Basic infrastructure cannot be taxed. Why? Because it's at the behest of the regulatory authority and not at the behest of the buyer. So, no tax. It is part and parcel of the land. It is only enhancing the value of the land. No tax. The common amenities which you are doing is nowhere regulatorily required. So thereby you are doing much beyond what is required for the purpose of development of the plot. So that is a different species of transaction requires you to pay tax. So say for example, land is 4,000 rupees. The basic infrastructure charges is say 250 rupees per square feet and the common amenities is say 150 rupees per square feet. The advanced ruling authority in Karnataka said in the case of Godrej properties that land no tax, basic infrastructure akin to land no tax, common amenities 18% rate of tax is what the advanced ruling is. Okay, so that is what there. You will probably go through. I'm sure the slides will be made available to all of you. While making this ruling, the advanced ruling authority decided what happens if the agreement to sale is entered prior to completion. What happens when the agreement is entered after the completion is the work is completed. They said whether agreement is entered into prior to completion or otherwise, the last piece, which is the common amenities, will always be taxed. The basic, which is the land, and the basic infrastructure would never be taxed. Pre and post completion agreements would not make any difference, is what it tried to say in its advance ruling. Got this point? Keep all of this in mind. These were advance ruling. Are advance ruling binding on me? We have learned all of this last 7 years. Is advance ruling binding on me?
No.
Will the officer, when he comes and audits me, will you go by this advance ruling?
No.
You will still look at the facts? Yeah? So this is binding on whom?
Both sides property.
Keep this in mind. So then we had a High Court judgment in the matter of Munjal Manish Bhai Bhatt. Very, very celebrated judgment. This judgment spoke predominantly about whether 1/3 land deduction can be forcefully imposed on a developer, or can I go with the actual land deduction if the value of the land is available with me at the point in time. High Court says 1/3 deeming fiction will not sustain. It struck down that 1/3 land deduction explanation which I spoke a couple of slides back. If I have to show you what it is. This below paragraph which is there says if the total amount charged includes the value of the land, then the value of the land is deemed to be 1/3 for the purpose of computation of GST. This they struck it down through this High Court, saying that you cannot impose 1/3 land deduction wherever the value of the land is readily available. And the value of the land is generally available through subregistrar, circle rate value, or SR rate value, or guidance value. Income tax guys know that there's something called guidance value. If you know the value of the land, you can always claim the actual deduction of land going by the Gujarat High Court. To be really frank, that is a law of the land today because we don't have any contrary decisions available, and law will prevail based on the High Court judgment today. But conservatively, we probably are continuing to pay tax on 2/3, claiming only 1/3 land deduction. Now, strangely, or to everybody's surprise, one of the writ petition which was forming part of the overall writ petitions through this matter was also a matter on tax on land, or rather the plot development. Only one paragraph has been discussed, paragraph 121 in some 150 paragraphs in the overall judgment, which speaks about plot. The one which is highlighted in purple color is relevant for us. Okay, this is statement made by the High Court. There may be tax liability if the development of land is undertaken pursuant to a contract with buyer. There may be tax liability if the development of land is undertaken pursuant to a contract with buyer. Full stop. However, if the land is already developed and thereafter agreement is entered with the buyer for sale of such developed land, then it would not involve any service. Something is flashing now. Can you look at the last two lines? Where did you read this? The last two lines, we saw it in earlier slide. If the land agreement to sell is entered after development of land, there is no tax. is what the circular said post the judgment. The circular came after the Gujarat High Court judgment to say what Gujarat High Court said in those last two lines. They did not clarify the one before that, which is there may be tax liability if the developer enters into a contract pursuant to that prior to completion. So, going by the High Court judgment, if you enter into a contract with a prospective buyer much before development is complete, the High Court is trying to say there is still an element of service. They are not saying how to pay tax. They are only recognizing there is service. Now you have prerogative to understand whether it is like an apartment, not like an apartment, works contract, not a works contract, or whatever. They are saying there is a presence of service whenever you enter into a contract prior to completion. So now read this, read the two ARs earlier, which has more force. Which has more force in law? Is High Court judgment has more force, or the advance ruling, authorities ruling in a particular case?
High Court.
So this is what is there as of now. This has not been overturned. Nothing has happened to this particular paragraph right now. So going by this paragraph now, as we are discussing, if you are developing a particular piece, getting into a plotted development project, developing it much before completion of the work, if you start entering into bookings or entering into agreement for sale and start collecting milestone-based advance payments, such agreements which are entered into before completion of the development, I believe, reading para 121 of the High Court judgment, it is in the nature of service pursuant to the contract entered at the behest of the buyer. There is element of service subjected to tax. We will discuss in the subsequent slide how to pay tax. But let us recognize there is an element of service which requires us to pay tax. Only those agreements which are entered into after the development of land is completed is where probably we can take an argument saying that there is no tax. Akin to an apartment, involved property, and all of those arguments in place. Schedule 3 comes into picture. Yes, sir, you had some question.
So if 50% of the plots are developed and then an agreement is entered, so it will be for the next 50% services only, or the whole service?
No. We have understood through L&T's judgment in the past that until and unless the overall project is completed, it is not. So if go by schedule 2(5)(b) as well, if any part of the consideration is issued prior to completion of the overall project, it's not of that particular plot alone. If the project is still under development, it's overall under development. Completion is completion in whole and not in part. So unless and until I can demonstrate the project is complete, I have to recognize that it is undergoing. It's a ongoing or under development project.
Because they have some, they're developing phase 1, phase 2, phase 3.
It's a separate RERA altogether now. So every phase would be a separate RERA registration. So every project, now the definition of project is real estate project. Real estate project is a project intended for sale. You will get a RERA registration for every REP. So the REP is a project now. That phase 1 is a separate project. Phase 1 complete, done. You start phase 2. Phase 2 you will get a separate RERA number. You will again decide and determine all of this again to phase 2. Phase 3 separately. So phase 1 is separate project, phase 2 is separate project, phase 3 is separate.
So if 95% of the project is also completed, 5% is pending. And in that 5%, if I start booking the amount, I'll have to pay for whole 100%.
Yes.
See, completion of project, I'm not talking about the particular piece of plot.
The whole
Completion of project could have your clubhouse, you can have your gymnasium, you can have a swimming pool, you can have your party hall, you can have your everything, A to Z, all fancy amenities. Until and unless everything is complete, you cannot say it is a completed development.
So for apartment, we have an OC, so we know it is completion. For plotted, what is?
There is nothing like that. Probably you go back at the end of the day, probably through an architect or a chartered engineer certificate, you will still demonstrate how the project is completed. And thereby demonstrate saying the project is completed by all means. The costs are totally incurred, there is nothing more to be incurred on the project, and thereby say prove or demonstrate that the project is complete. We will come to the next slide to see how to pay tax. At the moment, principally let us understand what is required going by the judgment of the High Court. Yeah?
Sir, this case, what are the facts of this case?
The facts are very simple. I am developing whatever my examples were in Godrej properties or Rabia Khanum, no different. Probably Godrej gave more facts. Like Rabia Khanum, the facts were here is I am entering into plotted development. I am developing a big land into smaller plots. I am giving basic infrastructure in the project. Am I required to pay tax on this if I receive advance earlier and later? Unfortunately, we don't have the total writ petition filed by this particular party. Judgment talks only in one paragraph. in this, on the aspect of plotted development, there is only one paragraph.
No,
The
he is
whole
the-
discussion is on one-third land reduction towards apartment. It's a villa project, whether one-third is applicable or not in the overall scheme of things. One of the parties had asked questions on plotting. So only one paragraph I will do,
This
which
was
one?
basically on construction.
Of a villa,
Okay.
where whether one-third land reduction only I should claim or actual land reduction. One of the questions was on plotting, which has been answered this way in para 120. So now, I will put across three options which are possible whenever I am doing a plot development. One, treat it as sale of plots. Whatever I am doing is only for plot. I cannot be made subjected to tax under GST. Schedule 3 will secure me from taxing under GST or a demand from GST tomorrow. I will not pay tax. That is first approach. Correct? A lot of people are doing it. The second approach is bifurcate the value. Bifurcate the value between land and development. To the extent of land, claim the benefit of deduction. Why? Because the explanation in the earlier slide does not apply to me. One-third land deduction cannot be imposed on plottings. So thereby I will go with the actual deduction of land. The balance, which is accretion in value of the land because of the development activity, I will offer it to tax. How to offer, we'll look at it, but that is how I can do. On the value accretion, which is development service, I will pay 18% GST. On the value of the land, I will not pay tax. Third, some people are doing this, treating it as an apartment, claiming one-third land deduction, paying 7.5% rate of tax. So you have three things in front of you. I believe second option is something which is viable, which is probably balancing both ways, not being very conservative, not being very aggressive as well. I would go in the second option, claim the deduction of actual value of the land, pay the tax on 18% at the rate of 18% of development services, claim my input tax rate as well on the development the cost involved in the development activity, maybe your goods, maybe your services, maybe your works contract activities, claim the ITC, set it off against your output tax, be happy. Mostly it will sail through because department also to some extent has understood second option is still feasible. Okay, first option obviously would be difficult to sail through. Some officer would agree, some may not agree, some authorities would agree, some may not agree, but you will always dilly-dally between tax payable and tax not payable. I would go with option 2, reading the way I read right from slide 1 till now. The logic for option 2 is again, one-third land deduction cannot be imposed on me. We should understand it is taxable. High Court itself has said there is a limit of surveys. I cannot go like an apartment pay tax at 7.5%, 1.5%. I am not a commercial apartment though, so it is not 18%. I am a works contract residuary service, thereby 18%. One-third land deduction applicable, thereby the second entry which is placed on the slide. Now, below components. So now I am go back to Godrej's facts now. There is value of land, there is basic infrastructure, there is common amenities. What I am trying to say is value of land, no tax. The basic infrastructure, even though could be obligated, even in an apartment project, I am required to give so many basic things going by the plan sanction. That does not mean that those basic things are not pay tax. No, I still pay tax. Likewise, those basic infrastructure also, I believe, is part of the overall development of the project, requires you to pay tax as works contract. The common amenities which they are talking about in the form of clubhouse and all of that are separate services in nature. Takes the coloration of, say, if you give membership of clubhouse is membership service, thereby pay tax. Legal support and documentation support is support function. 999,799 is residuary service, I pay tax 18%. And likewise, for maintenance, say they collect upfront 1 year maintenance, it is services in the form of maintenance, nothing to do with your plotting. So that requires you to offer to tax separately as maintenance activity. So I will go by the premise that land no tax, basic infrastructure, works contract service 18% tax, all the other amenities in the form of clubhouse and stuff like that which is placed on the slide are independent services by nature, offered to tax at the rate of tax applicable to that particular HSN, generally 18%. Understood this? While doing all of this, I am also benefited with the benefit of ITC because the rate of tax on the output is 18% as works contract. Whatever inputs are going into the respective output, I should be given the benefit of the input tax. Be a little mindful of common credits. What are common credits? Advertisement and marketing. I am advertising for development alone or for the land also. It's for overall project. So the marketing, advertisement, corporate expenses are all common credits. You have to apportion between land and taxable. Only prorating towards the development activity or a taxable income is what you can claim the input tax credit. Whatever is going into development, full credit available. Whatever is commonly done for the overall project would probably be prorated to the extent of only the taxable activity under Rule 42. We understood how the taxing of plotting is. How much time do we have? We still have 15 minutes. So now we'll discuss a little interesting aspect of joint development agreement in a plotted development. We have always seen joint development agreements in apartment project, commercial project and stuff like that. In a joint development, in a plotting as well, there can be joint development agreement. Typical, like an apartment project, the transactions remain same. The landowner will give you development rights to come into the project and develop the project. So there is a transaction from landowner to developer in the form of development rights, which is more so called as TDR, which even Naveen was trying to discuss. There is development service provided by the developer to the landowner to the extent of area shared by the developer to the landowner, if it's an area sharing agreement. There can be area sharing agreement, there can be revenue sharing agreement. Taking one step back. Area sharing agreement is an agreement where the developer agrees to develop all the plots and give back some plots to the landowner back for him to go and sell ahead. That is area sharing. Revenue sharing arrangement is an arrangement where the developer himself would sell all the plots basis of the ratio which is agreed. In Naveen's example, 40% of the ratio was landowner and 60% for developer. 40% of the revenue that I collect on selling, the developer will share such revenue with the landowner. So what I give to the landowner in a revenue sharing arrangement is not plot. I'll give him money. In an area sharing arrangement, I'll give back the developed plots to the extent of the agreed ratio. Understood this aspect? Now, in an area sharing agreement, in a joint development transaction, there are two transactions. One, TDR by the landowner to the developer. Second, development service or a works contract service by the developer to the landowner. We'll have to understand how these two have to be taxed. When it comes to revenue sharing arrangements in a plotting, there is only one transaction which merits discussion under GST. Development rights, TDR by the landowner to the developer. Why is the second one missing? Because the development service or the works contract service is not done by the developer at the behest of the landowner. He is doing on his own self. Why? Because he has to sell, get money from third parties and give the share to the developer, landowner. So in a JDA where it is revenue sharing arrangement, there is only one transaction which requires discussion under GST, which is TDR. Unlike a area sharing arrangement where there is one more transaction in the form of development service by the developer to the landowner. Understood? Now I'll come to this slide a little later. I will go to the subsequent slide. Yeah. We'll discuss about how it is to be taxed. The TDR portion, if it's an area sharing, revenue sharing, if it's a development service in a revenue sharing, area sharing arrangement. Let us look at TDR now. Transfer of development rights. What is TDR? Transfer of development right, allowing the developer to come into the project to carry out the development activity and subsequently either sell or give it back to the landowner to the extent of his share. Valuation. Now, going by the change in scheme of things with effect from 1/4/2019, when the rate notification 3/2019 was introduced, the valuation principles were also introduced for the first time for a joint development agreement. In case of a construction of an apartment, whether it be commercial or residential, they say the value which is nearest to the date of entry into JDA should be superimposed to the area that is shared with the landowner. Little technical, let's make it very simple. In the same example, in a area sharing arrangement, if I have to give back 40 in a overall 100 apartments, assume 40 apartments have to be given back to the landowner. How do we value that 40 apartments which the developer is giving to the landowner? The law says, take the first sale made by the developer to an independent party nearest to the JDA date, impose that value on the 40 apartments which are giving back to the landowner. That is the value on which I have to pay tax. Is what the notifications are trying to say. Okay. Now, as Naveen was pointing out, when it comes to a TDR, there is an exemption available to the extent of units sold before OC. I am only required to pay units which are unsold as development rights. Okay, so again taking a step back now, there are two taxes in the hands of the developer. One as a TDR, one as a construction service when you talk about apartment. I will talk about apartment and come back to plotting. TDR, I will only pay tax to the extent of units which are unsold in my hands as a developer. In the same example, 10 units were unsold in the hands of the developer, I will pay tax on 10 units. Okay, who will pay? The developer will pay under reverse charge. Exemption is available to the extent of units sold, exemption is not available to the extent of units not sold. 10 units not sold, I will pay tax on 10 units. Now, the construction service, that is the 40 units which the developer gave to the landowner, the law says the first sale value in the hands of the developer should be construed to be the value for the purpose of 40 apartments given to the landowner. If he is selling at 4,000 rupees per square feet for the first sale, he has to take that for 4,000 rupees per square feet on the 40 apartments which is given to the landowner. This is what law says. Into 7.5% divided by, into 1/3 land deduction in case of apartment. Did we get this?
That is TDR.
That is construction service on the units given back. TDR is only 10 units.
That's all.
40 units is what are given back to the landowner. On 40 units, first sale value, I will impose it on that and raise an invoice on the landowner.
That first sale can be either the landlord's apartment or
It has to be developer because from the perspective of the developer is where I have to value the transaction. Now, whatever principles I told you is an explanation to 3/19 or rather the 11/70 which is the rate notification where the consideration, where the supply is in the form of construction of a residential or commercial apartment. We understood in earlier slides that residential and commercial apartment is not same as plots. Did we not? So thereby, this valuation principle which is given in rate notification would definitely not apply to sale of plots, or rather the plots developed at the behest of the landowner. Going by this logic, the first sale value, the last sale value or any value which is there to the third party may not be the valuation principles which I might have to apply. Having said this, nevertheless, since there is no independent valuation principle given in the law for plotting, we can still borrow those connotations from those rate notifications and still say that the value at which the development service is offered to tax to the third party can still be the value for development services conducted for carried out for the units which are given back to the landowner. Means, we understood the previous slide, if I sell the plot to a third party, sale of land no tax, development service are offered to tax. If the development service is offered to tax, I say 250 rupees per square feet. I will impose the same 250 rupees per square feet to the extent of the units which I am giving back to the landowner in an area sharing arrangement. If I am giving him 40 plots, 250 rupees per square feet into 40 into the area into 18% is the tax which I will pay to the extent of the area given to the landowner. Did we get this?
What about the land cost? Land.
Land cost would not suffer tax because of what we discussed in the earlier.
No, in apartment we are reducing 1/3.
Correct. And 1/3 will not apply to us. I'll go by actual reduction. So actual reduction is the actual value of land. What is left out is only development activity. So development activity to the third party, assume I am charging 250 rupees. I'll tell you why 250 in our example. If I am charging to third party 250 rupees as development service, I will take the 250 rupees and impose on the development service carried out for landowner offer 18% as the rate of tax.
How did we arrive?
Forward charge.
How did we arrive at 250?
Correct. So now, how can we arrive? That means I have to go one slide earlier. Here. Okay? I did not discuss valuation principles here. Again, under the GST law, go anywhere, you will not find how to value this transaction. There is nothing. You have to infer through various reading. Now you have valuation rules 27, 28, 29, 30, 31 and so on and so forth. 27, 28, 29, you will not get valuation. There is no open market value, there is no like and like goods. It is not a related party transaction, it is not agency principal transaction. Going in that sequence, you will probably end up in cost plus 10% as probably a method which you can, you can borrow from the principles. So you know your costing for development. You know your overall cost which you will incur on the development activity. Typically, if you develop a decent project in Bangalore, we have seen it could range between 250 to 350 rupees per square feet for development activity. We are putting 10% on top of that, going by the rule 30 which is available in the valuation rules. Because there is a principle available, we are trying to borrow the principle from there and trying to demonstrate saying that I am still within the rules framework and doing cost plus 10% as a methodology. I will apply cost plus 10% as a development activity and charge 18% rate of tax on that. So upfront, you will do a budgeting, you will know a price band in which you will incur the cost. you will have a little buffer for extra cost if there is a cost overrun. Fix up the cost of development plus 10%, that becomes a development service which will be offered to tax for GST. That 250 or 300 rupees in my example was that value. If that is the value which is offered to tax for third party sale, impose the same value to the land given back to the landowner is what I was trying to explain.
As works contract tax.
As works contract service.
What about TDR?
I'll come to TDR. Okay, so this is service value. Now, for TDR, is RCM applicable? Again, going back to Navin's presentation, is RCM applicable?
Yes.
Why?
As per the Telangana High Court case.
No, you're not talking about whether TDR is taxable. TDR is taxable.
Taxable.
Whether RCM is applicable for a project which is plotted development. I said we cannot equate plot with apartment. We cannot equate plot with apartment. Is RCM only an apartment?
No, they have categorized this kind of development activity into two sections. No, first is transfer of development rights.
No,
And then
it's
the
taxable.
construction.
It's taxable. I'm not saying it's not taxable. Going by the premise it is taxable. Will TDR in a plotting be under RCM or forward charge? This is the only question which I'm asking. Whatever Navin discussed for RCM entry number 5B, if I'm not wrong, would apply to plotting also, or will it only apply to apartment development? The answer is no. Why? Because if you look at notification 5/19 where they inserted RCM, they said construction of a project. They did not use, thankfully, or rather strangely or surprisingly, construction of an apartment in a real estate project. They just said RCM is applicable in a project for a construction. So thereby the terminology used there is only project and not construction of a residential and a commercial apartment in a project. So only project is defined there. So if it is a project done by a promoter at the behest of any person, then RCM kicks in. Is this a project? We understood, going by the definition of RERA, project includes plotting. So this is a project. So RCM is applicable. So if RCM is applicable, the developer will pay tax on RCM. Now, will we get exemption for sold plots?
No.
Like what we discussed in 4/19? The answer is no, because to get into 4/19 to claim the exception or TDR to the extent of booked units, it has to be a residential project. Is this a residential project? The answer is no. If it is not a residential project, you will not get exemption on the units sold before completion. That means full TDR has to be paid. So what is full TDR? What is full TDR? In the hands of the landowner, the land given up is the value of the TDR from the hands of the landowner. From the hands of the developer, what is the value of the TDR? The cost incurred to develop the units given back to the landowner. Did you get it? From landowner standpoint, what is the value he is giving up? Is the value of the land which is conveying back to the developer. In our example is 60%. What is the value to the developer of the TDR? Is the cost that he incurs to develop the 40% of the area of the land which is given back to the landowner. We have these two values. According to me, it cannot be anything beyond these two values. You have to do this or this. There is no answer to it. It is not only this or only this. It can be this or this. If you look at the valuation option which are given, it is either guidance value of the land given up or the cost plus 10% of the development incurred by the developer to the landowner on the units belonging to the landowner. Could be the value of the TDR. I am not saying will be the value of the TDR because there is no guidance. It could be or may be, or you can apply that value. Either of this.
The provisioning of services is from the behest of the landlord, no?
If you go to rule 27, if you don't know the value of the, if you don't know the open market value, if you don't know the like and likelihood value, you can value the supply basis of what is incoming. If you know the value of the consideration value can be the value of the service.
Correct. So that is why the time and
In this
value of
case,
supply-
is development cost.
Correct, sir. But that is why time and value of supply notification was discussed, no? What should be the value? So only after completion of the project, what it
I've still not gone into time of supply. I'm still trying to value.
value
only.
value. So
Correct.
when the plotted the development is ready,
When is the TDR given?
TDR is given on the execution.
When is the
of
taxable
the-
event?
Taxable event
He's
is
signing the JDA.
Yeah.
That is the signing the JDA is a taxable event.
Yeah.
So at the taxable event,
Yeah.
you have to arrive at the value of the service.
no value is deferred, no?
No. I'll come to 6 bar 19. You're referring to 6 bar 19.
No sir, 4 bar 2018 something.
No, all that is gone. Not for all this. Once 1419 came, any JDA entered after 1419, 4 bar 18 lost relevancy. There was an explanation placed before 4 bar 18 saying that this applies only to JDA entered before 1419. So that doesn't apply to this case. So we're not talking about 4 bar 18. That is all over now. If your assessment is over for those years, over, nobody will ask you that as well. So we're only talking about 1419 onwards. Okay, today's situation. So thereby, standing on that day, you have to value the service. How can you value the service? Is only these two methods which are available. Either guidance value of the land given up or the incoming consideration in the form of development service from the developer to the landowner. These are the only two methods which are available. So according to it, that has to be the value of the land. Whether it is area share or revenue share, you probably have one more avenue to arrive at the value. In a revenue sharing, what is the consideration which I am getting from the developer? In a revenue sharing, we discussed that 5 minutes back.
40%.
Sale of the
I get money. I get money, right? He will sell all the 100 units. Whatever he gets 100 units, 40% of the money he will transfer it to me. So, in a revenue sharing arrangement, I am able to value or arrive at a value of the TDR, but not on day one, but as we progress. Right? As we progress, no? As he sells, he keeps giving me 40%. So, probably a valuation could be arrived at basis of the money that I start getting from the developer as and when he sells the units or the plots and he transfers money to me. So that could also be the value of the TDR, because what I am giving is for money and money is coming in tranches. The tranches which is coming into me could be the milestone based on which I could also pay tax.
continuous supply of service, huh?
No, it is not continuous, but it is indeterminate on day one. I can as and when start doing it is when I can start deciding. Sir, I have 2-3 minutes only. Last session I can take anybody. If such kind people are here, I can speak. So that could be a mode of valuation in case of a revenue sharing arrangement in a plotting. Time of supply, that is where sir was trying to point at. Time of supply, this is the notification. Like 4 bar 18, when scheme change in 1419 onwards, 6 bar 19 was introduced. What is 6 bar 19? 6 bar 19 deferred liability to the OC. For what is all this? 6 bar 19 said, a promoter who receives development right for construction of a project against consideration payable by him, wholly or partly in the form of construction service of commercial or residential apartment in a project. I will not read what is there after that. He will be the person who will pay tax on TDR, monetary consideration in the TDR, and supply of construction service not later than receipt of completion certificate. That means if I am entering to JDA, I am getting TDR by paying consideration in form of apartment, could be commercial or residential. On the TDR as well as the apartment, on the construction service, I can pay tax as late as OC date. I can also pay tax earlier, but I cannot pay tax beyond OC, is what this notification is trying to say. Okay, it is pushing my liability to the end date. Now, is this applicable to plotting? Is this applicable to plotting development? Why?
Construction of project. Construction of project.
What is construction?
Project has a
Project include, plotted development is part of is a project.
Completion of the certificate.
I will demonstrate. I have not given everything. It says first occupation, competent authority, all of that is there. I can still demonstrate. Why? Can I apply this for plotting?
Your purpose is
commercial
that is any other form.
I should not have realized that later, but yeah.
Apartments.
So, initial reading or first impression says, if the consideration is in the form of apartment, then I can push it. But if you read subsequently, it says in any other form. That any other form can be anything other than apartment also, which could be development service in my plotting. If my consideration towards TDR is development service, seems like I can still defer my liability. But what can you defer? Can you defer TDR or can you defer the construction service or both? If you look at A is deferring TDR. In which situation? When the consideration is in the form of commercial or residential apartment. That means TDR, if the consideration is apartment, only I can defer. If it's plotting, I cannot defer. B, if the consideration for TDR is monetary consideration, is goodwill, non-refundable deposit, then I can defer to last. If it is plotting, I cannot defer in TDR. C was not relevant or not given. D, construction service against consideration of TDR. Construction service is development service. Development service is works contract service. So in a plotting, if I am doing works contract service to the landowner, going by D, I can defer the development service to the last date. However, TDR cannot be deferred to the last date. Did you get it? Two transactions in an area sharing arrangement in a plotting, TDR and construction and development service. TDR 6/19 doesn't allow me to defer to the last. Construction service or development services, going by D and reading in any other form to include plotting, I can defer the development service or the construction service liability to the last date. Did you understand this? Little risky proposition, because in any other form, anybody could argue anyway. They can say that any other form also should be probably read along with what is spelled out prior to that, adjustum generis. Probably if you read by that, it should also be in the form of a building, if not commercial or residential. But one could otherwise argue as well, saying that when cash is there, cash can never be building. So adjustum generis cannot work here. Thereby I can also read it to include plotting as well. So both ways can be interpreted. I am not giving you answer. I am only trying to give you a way of reading this. So time of supply here for TDR, any which case is on day one. You will run the risk if you don't pay tax on day one. Probably if not day one, you can start progressively paying as and when there is a counter debit by the other party in the form of construction or development service, so that you are obviously starting to pay tax before the completion is done. So going technically by the notification, you probably have to value it on day one and pay on day one. You cannot defer it to last date. Yeah, that is time of supply. Valuation of development service, same as valuation of TDR. It will not be anything else because it's a barter. Both have to go hand in hand. The valuation principles are the same. Whatever you value the TDR has to be valued to the development services. Just that the time of supply, you can probably take shelter under 6/19 what we discussed and defer it to the last date if you wish to. Got it? ITC, we discussed earlier, ITC eligible. Common credits, be a little mindful, you might have to do Rule 42. I will not discuss all of this, we have discussed as and when we have.
Sir, you mean to say 2 taxes they have to pay?
You have to pay. Even in apartment you are paying.
Gujarat High Court, it's not been debated or argued in it.
It's not gone to the next
The
level.
word uses may. Maybe the development may be taxed.
There may be a tax liability means if you enter into, there is possibility of element of service present.
Correct.
Means they have categorically not said is sale of land, no tax.
So neither they have said yes, they are not.
No, this is enough to say it is not plain vanilla land.
In the sense, this area, if you look at the past precedents in the company with the VAT regime, if you look at that, so definitely it will go to the Supreme Court. Definitely.
It will go, sir. A may in some situation has to be read as may. May shall also be read as shall in many situations if it is imposing. In this case, according to this may has to be read as shall if there is an element of service present. They have not said because they don't know, they have not gotten into the facts too much. They have said there may be tax liability if there is an element of service. Correct? So service is there, then there is tax liability which is possible.
Definitely, it's in the baby stage. Now the appellate authority advanced ruling, whatever its view, probably it may be upheld. There is likelihood it may be
Possible.
happen this side, that side. Definitely it will go to the Supreme Court.
It will go, sir.
Okay,
Certainly.
it will go.
Certainly.
Now, your view definitely it will go. It's difficult for us to what may or may not.
Absolutely.
If you come to the second my point, it is a, now we are saying that it's a works contract. It's a development. Can't we say that it's a developmental incidental to the land?
That is what
Take a
this.
scenario
That is what
because-
this judgment says.
No, sir, not same Gujarat High Court says that land you cannot borrow 1/3. Suppose if I am going to leveling, development, everything I am going to the developmental cost, then I will construct a building.
No, but the
Then
point.
in that scenario, definitely we are going to consider all the leveling development cost as a cost of land.
See, what happens is, if he is working only on your piece of plot, what you are saying, I am okay. There is something called internal development, there is something called external development. IDC, EDC. To the extent of IDC, what you are saying perfectly alright. To the extent of EDC, there is value beyond land. Is what the problem is. So predominant cost which you incur in the development is not on your land. It is outside your land to create the infrastructure.
Can create in that sense land can buy. For example, take a scenario. You said that it's a clubhouse. Clubhouse it can't be. It's a different component altogether.
No, sir. How will you pay tax on the land, on the roads, and the street lights, on the parks, on the drainage, on the plumbing and all
Can
that?
I sell that land without that? It's incidental to development.
Case is the same in apartment also. Can you develop an apartment without ABC and still argue it is not works contract? In an apartment.
You mean to say that you have to go to use HSN, you have to use it for a WC works contract?
No, 9954. It is the same HSN. I am saying if you go by the same argument, why am I paying tax on apartment? Same argument will take.
No, there also that land again.
Forget the land there. We talk about building only, no. I am constructing. End of the day, what am I giving is an end product which is an involved property only. No difference. Just that at what point in time do I enter into an agreement is the trigger point for us to look at. From there, is there something which I am doing for you or not? If I have done already, then there is no question. If I am still doing but you come in between, I am still continuing to do it. They are saying it's pursuant to this contract and continue to do it. Is what these words also say. Sorry.
So the
Sorry.
can we because there's a value involved is it?
I am okay with this, sir. We can definitely argue.
Across India, it will be in the billions. Tax
Certainly.
number is a billion.
Think of it, you don't pay tax now, ultimately it's upheld.
No, another third point is that we give the tax money to the clients. So can we take an aggressive stand stating that we pay with the underpress mechanism is not there?
Mechanism.
Can we pay that because we can go for the rate petition? Can't we say that we can avoid the
We
interest?
can certainly do. Wherever the stakes are high,
I will
and
take an
you-
application to GST authorities. I can't do it's not taxable only to comply with your.
two things you have to keep in mind. One is you cannot collect tax from the buyer.
Correct.
Second is you cannot take the cum tax benefit.
Correct.
These two you have to keep in
I
mind.
would say that I have paid out of my books.
Correct. But cum tax you cannot take.
Yeah.
Cum tax is basically what is the
That is
revenue,
not say
you
the
cannot
cum
say
tax.
including tax.
So that because it will be which is the billion, it's not small amount. Hopefully the Supreme Court may happen.
Possible.
What the
Possible.
authority said.
Certainly possible.
So High Court because this High Court has not been
So
interpreted.
this matter will certainly be going before Supreme
Definitely,
Court, no doubt about
huge.
it.
So then,
Implications are
tax
huge.
law planning point of
But-
view, can we do that?
We can certainly do, but going by industry practice, most of us are paying tax. Going by industry practice, if you are asking, most of us are paying tax. You have all three combinations. People are there who are not paying tax as well.
Because I think
I'm
tomorrow-
not discounting
If tomorrow if we get a favor order from the Supreme Court, whatever we pay, it's
because of
going
collecting
to
and paying, no sir. I mean, I know, I understand saying that this aspect is definitely possible.
the conservative approach itself.
So points of
It is, I wouldn't say it's total conservative, it is via media. If you take conservative to say, okay, I'll pay 7.5% like apartment, then I would say it's very conservative. Why? See, what are you paying tax on now? Let's dissect for 2 minutes. Your cost is 100. I'm asking you to pay tax on 110. On 100 there is 18% input tax. On 10 into 18 is 1.8. On 100, 1.8% of the tax is what you're paying out of
I
pocket.
totally agree with you.
That's
The
all.
developer tax will have ITC.
ITC.
So output tax, that's
Correct, only 1.8% is the additional cost of the total cost of the project cost. That is still okay, no, negligible as compared to the rate of interest.
The Godrej, they themselves defined what is X, Y, Z and the component.
We were involved in that transaction as well, which I do not want to say. So we categorically broke and said what we wanted to do, and then thereby did accordingly.
Because in Bombay, a lot of companies are doing
So
that.
thereby we are splitting. We want to split ourselves and say before they could say what, we are saying this. Take this and pay tax.
So in that case also valuation mechanism will come for the land and other things.
Sir, in one of the recent arrangements I saw, rather than JV,
We will probably
just 2 minutes I'll take. Rather than JV, what they have done an agreement to sale. What they are trying to present it before the authority, I have come forward to take 20,000 square feet out of 1 lakh square feet, which the landlord is owning. So the condition for me to pay the consideration was, he told me to develop it. As he told,
right,
he is trying
that's
to
right.
show it as if the development activity is only an incidental or this is only part of the consideration which I have agreed. My main intention is coming forward to buy this land from the landlord.
So this I think is a little different, this is a little difficult to pass through because this is JD in disguise.
So the agreement is a concept than a JDA.
This is JD in disguise.
Slightly different.
I agree. You might show, but this is JD in disguise. Because on day one you cannot say this. There has to be an agreement to sell the land. If I have to do this, if I was there, what I would have done is, I would have entered into agreement to sell today.
Yes.
Saying that I am ready to sell 100 acres.
Yes.
You buy at say 1,000 crores. We will wait for 2 months. Okay. Then the landowner developer comes forward and says that I am not able to buy X amount at this value. The landowner will say that then I am not ready to sell. He will say no, I want to buy. Landowner will say instead of doing this, you develop me and give. So I'll create history where originally it was supposed to be sale of land. Consequently, for closure of the agreement, something else he had to do for take that land and go.
Right, so what he said is that
Problem.
you
To come out of the breach of the contract.
Two agreements are one is agreement to sell, say for example you're 40%, you'll have an agreement, another is a developmental agreement. Developmental agreement for owner it remains to be a land development. For
If it's a contract development agreement, it's a different thing. I'm still okay with it.
So that-
Then the
that's
project name cannot be developer.
Yes.
Both ways you cannot put board. You have to put landowner's name only there.
plat what is
So this will not, if I'm first timer, this will work. If I'm brand already in the market, the brand will sell, this will not work. Thereby they are fixed in JDM model. Done. Okay. Thank you so much.